In this video, I'll help answer the question, can Palantir go to $70? And stay to the end, I'll give you 3 key indicators to look for that might give you a sign to sell this stock. All right, if you're new to investing or want to get better at investing, you're in the right place. Let's go ahead and dive in. We're going to use the 4M analysis to take a look at this stock. The 4Ms were inspired by Warren Buffett and Charlie Munger, and that phrase 4M was coined by Phil Towns. So what are the 4Ms? Here we go. First M is the math part of investing. That's called the margin of safety. The second M is the meaning. That's the business model. How many revenue streams does the business have and how scalable are those revenue streams? Scalable means you can increase revenue faster than liabilities. Highest liability would be payroll. All right, that third M would be the moat. That's how a business compares to other businesses in the same sector and industry. And that last M is management. That's a track record of the CEO. All right, before we dive into Tykr, I'll kind of summarize what I look for in Tykr. I look for 3 key things within Tykr. First is that summary. Stocks in Tykr are either on sale, watch, or overpriced. We want those on sale stocks. Those are green. Then I look for the score. The higher the score, the safer the investment. And then I look for that margin of safety. The higher the margin of safety, the higher potential returns you can make. Now, before we take a look at Tykr, if you are interested, you can go to tykr.com, go to education, and then go to calculations. You can read our calculations. We are open source, which means you can take the calculations. You can go create your own version of Tykr. At the end of the day, we really just want you buying and selling stocks on your own with confidence. All right, so let's go ahead and take a look at Tykr. And you can see that Palantir is on sale. The score is 72 out of 100. And the margin of safety is 61%. On sale, only 15%, roughly 15% of the stocks in Tykr can make it to on sale. So this stock, so far, looking really good on the financials. If you want to go a step further and give yourself a little more confidence, there's 2 other tabs I like to look at. I like to go to the financials tab, and I like to look at all the numbers here and making sure they're increasing quarter over quarter and year over year. These are the numbers that roll up into that summary score in MOS. You can read about those in the calculations. I will drill into the most important number that institutions look for, which is that earnings per share. Earnings per share is your net income divided by outstanding shares. Essentially, it's the profitability of the company. So look at EPS. I want to see that increasing, and you can see here the quarter over quarter. It flipped from negative to positive back in December of 22 and slowly increasing over time. And then I'll jump to the earnings calendar. That's the other tab I'll look at to make sure the EPS is beating the estimates. We want to see those reports consistently beating estimates. Check this out. We can see positive numbers here on the right. Institutions, they really look for those 2 key elements. Are profits increasing? And is the EPS beating those estimates? So overall, with the first M, we can go ahead and check that box. All right, let's move on to that second M. That's the meaning. So at a high level, Palantir is an enterprise SaaS, software as a service, coupled with ProServe. What is ProServe? ProServe is professional services. That's important because when you sell a software to a company, in this case, one of their software products, I'll break them down in a second, it comes with a team of people. Those team of people work with that customer to make sure the software is working as intended. I really like ProServe because you can get ahead of issues before they arise. When you sell a software to somebody, and it's just a software, and a customer becomes a little agitated or frustrated, or they're not getting what they want, that creates a high probability of leaving or churning. While when you have ProServe, you can get ahead of it. You can ask questions such as, how can we make this software work better for you? What can I do to make your life easier? How can I better serve you? When you do that, when you really handhold the customer through the processes and work with them, it creates a lower probability of churning out. In other words, making a stickier platform. So that's what the product is at a high level. It's enterprise SaaS coupled with professional services or consulting. Now, with their products, they really have 3 key products. Yes, there's other products that kind of roll up underneath, but the key categories would be Foundry, which is focused on businesses. Then you have Gotham, which is focused on your government organizations. I'll give you some names here in a second. And then you have Apollo, which is how you deploy the software. So on the Foundry side, they have customers such as Morgan Stanley, Merck, Airbus, Lilium, Pacific Gas and Electric, Fiat, Ferrari, Fujitsu, General Mills, CBS, Aramark, Panasonic North America, and Cummins, as in Cummins Diesel. And what they're doing on the foundry side is they're helping businesses collect data. I've got a lot of experience working with and working in large corporations. If you don't know my background, I'll keep it really quick. I don't want to bore you to death, but about 20 years in business, built and sold my first company in the 2000s, then got into corporate contracting, consulting, working with large companies. And what they're really focused on is always increasing profits. That's the number one thing they focus on, especially when you get into those boardrooms. They're not talking about market cap or PDE ratios or charts and graphs. It's profits. That's the focus. And with large corporations, they have a lot of data. There's a lot of noise, a lot of data that's not being used to help businesses make smarter decisions. So Palantir comes in and they help organize that data so businesses make smarter decisions with marketing, sales, and operations. Those are really the three key areas. There can be more, but they want to help businesses be more effective at marketing, selling more efficiently, and of course, operating more efficiently. All right, now over to the government side. You have Gotham, that's the Gotham product, and it serves organizations including the U.S. Army, U.S. Air Force, U.S. Navy, U.S. Marines, and government orgs in Ukraine, Austria, France, Switzerland, and more. And what they're doing on that side is helping prevent conflicts, worldwide conflicts, and when conflicts do arise, helping the US and its allies become more efficient, more strategic, and make smarter decisions in those conflicts. Now, before I say if the meaning passes or not, there's 5 other points I want to hit on. All right, here we go. So number 1 would be their earnings report from 2023, their yearly report, not quarterly. So they increased their commercial revenue by 27% year over year. They increased their government revenue by 16% year over year. And this is the big one. They increased their customer count by 42% year over year. We're going to talk about what's happening there in a second, but hold on to that number, 42%. You can almost round it up to 50%. It's just incredible. Moving on to number 2, they released a new product called AIP, Artificial Intelligent Platform. What it does is it's focusing on integrating AI with data, logic, and action to help organizations make smarter decisions in real time. The key word there is, or 2 words would be real time. All right, moving on to number 3, this is big. The Army just signed a $480 million contract. This is recent, as of 2024. $480 million contract to help support the Maven Smart System. So what is the Maven Smart System? Well, what it does is it works with satellite imagery, geolocation data, and communication intercepts. Essentially, it's a tool that helps with battlefield analysis. All right, moving on to number 4. This is a fun one. This was mentioned by Alex Karp, which is the number of inbound sales calls per month is as much as it was per year. People are calling into Palantir faster than they ever have before. Why is that happening? Well, this leads to point 5, which is their current customers, Palantir customers, are actually showing other businesses, these are non-customers of Palantir, but they're showing other businesses what Palantir is doing for their business. And these other businesses are saying, okay, that is something I need. Who do I talk to? And they're calling up Palantir. Those inbound sales calls are growing astronomically. That's where you want to be. Anybody in sales, you want the incoming calls, not you going outgoing. So the incoming sales calls are going through the roof. That's a really good sign. That shows that there's not a lot of competition out there. People want Palantir. So overall, with this second M, we can go ahead and say that passes as well. Let's move on to the Moat. The Moat, we're not going to spend too much time here. I can say this, Palantir's Moat is becoming a lot wider. The competition, well, do they have competition? Maybe. Let's get into that. So you have Snowflake, Alteryx, and Splunk. Here's the update on each of these businesses. So Splunk recently merged with Cisco. Splunk is a decent product, serves a lot of mid-sized businesses, maybe some large businesses, but they do not compete with Palantir at that enterprise level. Then you have Alteryx. Alteryx is a company I followed for years. They recently went private. When a business goes from public to private, that's not always a good sign. Now, I was watching this stock for years within Tykr. I can say this, the financials did not look great. They were overpriced for a very long time. So this stock here, I do not see a threat there. And then you look at Snowflake. Snowflake's a good product, but Do they compete with Palantir? Well, the stock is overpriced, scores 39 out of 100, and that margin of safety is 1%. So they do not compete with Palantir. Overall, you can check the Moat as well. All right, let's jump over to that management. That's the last M. We're not going to spend too much time here. We'll take a look at Glassdoor. We use Glassdoor within the 4M confidence booster. Long story short, studies have been done that higher Glassdoor ratings have shown stocks with higher returns in the market. Essentially what that means is happier employees actually produce better results. So treat your employees with respect. All right, so looking in Glassdoor, we can see the company rating is a 3.8 out of 5, and the CEO approval is a 63% out of 100. Ideally, I like to see a 4.0 or higher on the company and then an 80% or higher on the CEO approval. So these numbers are close, but not quite there. I do know this because I've watched Alex for years, paying attention to the company. Not all the employees like the products they offer to the market, especially on the government side, the Gotham product, because it helps militaries, especially US and its allies. I know nobody likes conflict. Nobody wants to see conflicts going on in the world, but these organizations do need help, especially with the tech side, and Palantir is solving that problem. Alex has said, and I do like this, he's not going to sugarcoat it. If you don't like what they're doing, go get another job. And I'm in full agreement. If you don't like the company you work for and what they're selling, you're not being forced to work there. You can go work somewhere else. And I also like Alex because he's not going to sugarcoat things. He's just going to cut right to the chase. I think we need to hear that. We like CEOs that are transparent. They're going to tell it how it is. They're not going to make things all flowers, rainbows, and butterflies. That's not life. And he'll get right to the point. So I really appreciate when he shows that candor within interviews. So with the management, we're going to go ahead and check that box as well. So all 4M's pass. Let's jump back into Tykr, take a closer look at the 4M score. So looking in the middle here, you can see the scores of 65 out of 100. Ideally, you want to see 80 or close to 80 or higher for a buy, like a definitive buy. And then if you see a 59 or lower, that's a sell. So this stock, it's not quite there on the sell side, but it's hovering around 65. Most likely because maybe the scores could be a little better on that management. But it's nothing at this moment to consider selling. However, I would keep your eyes on this. Jumping over to the price, let's talk about this for a minute. So right now we can see the fair value is $70. This is the estimated share price in 10 years. Can this stock go to $70 in 10 years? I strongly believe it can go to $70 in the next 5 years. I know some people compare Palantir to an Nvidia, some other stocks out there. It's not as scalable, and the reason is the business model. Yes, it's enterprise SaaS, which can be scalable, especially when you have expansion revenue. Expansion revenue is when you sell a customer contract 1 year and then you add more products and services year over year, which creates more revenue from a single customer every year after that. You want products that do that. Well, Palantir does that, but it's a slow sales cycle. It can be months, it can be years to really onboard Palantir. And then a contract can be signed for 3 years, 5 years, 7 years, 10 years, or longer. So it's very sticky. But getting to that point, it does take a while. So it's not super scalable like an Alphabet or like a Microsoft. So do keep that in mind. Yes, it can go to 70, and I feel in 5 years, but can it go to 500 in the next 5 years or even 10 years? I would probably argue no. All right, there's my thoughts on the price. Let's go ahead and talk about the 3 indicators I'm going to be looking for to let me know when to sell this stock, if I sell the stock. Let's take a closer look. So number 1 would be jumping over to the financials tab, go to EPS, and you can see the profits increasing quarter over quarter. You can see we go from like 0.01, 0.03, 0.04, 0.05, 5 cents. If we were to see 2, not 1, but 2 quarters where this stock is turning around and going the other direction, like let's say it goes from 0.05 to 0.04 to 0.03, 1 quarter, I'm gonna be a bit nervous, but if it does it for 2 quarters, that's it. I'm not gonna wait on this. Large institutions are gonna start selling off. So that's one indicator I'm looking for. Number 2 would be, very similar to this, would be your earnings calendar. If you see the stock missing reports, that's another bad sign. We like the green over here on the right, they're beating, but if we see 1 quarter, again, I'm gonna be nervous, but if I see 2, that's it. I am not gonna hold on. Now might be a good time to sell. The third thing I'm gonna be paying attention to would be that news tab. If I see any news in here that Palantir loses a large contract, such as one of the big military players like the US Army, US Marines, US Air Force, so on and so forth, that's another indicator that, yeah, that's a bad sign. That's a significant amount of revenue that we're going to miss out on. I'm out. And on the business side, if I see some of those big players jumping ship to go work with somebody else, like a Merck or a Morgan Stanley, that's a sign, time to sell. Right now, I don't foresee any of those three indicators happening, but I just want to be transparent with you guys, let you know what I'm paying attention to most. And I want to just hammer on this before we wrap up. When you're looking at stocks, there's a lot of different indicators you can read out there and look at. I only know this from working within public companies and investing for over 15 years. The number one thing to pay attention to by a long shot are profits. When you get into these companies, you start working your way up the chain, it's profits that matter most. Yes, revenue is second, but profits is first. So when you get into this tool, or if you even think about using Tykr, go right to that financials tab, take a look at net income and EPS. You're going to see those profits increasing. And number two, taking a look at that earnings calendar, making sure they're beating those estimates. When those two things align like that, you've got a great stock. But if they're missing, profits are decreasing and those earnings reports are missing, you got yourself a problem. It's time to get out. I still like Palantir. I'm still a long-term investor, but doesn't mean it's the perfect company. I do pay attention to certain things that tell me, Sean, now's the time to sell. All right, there's my price target and what I'm looking for to sell the stock. But I'd love to hear what you guys have to say. And if you're interested, if you want to buy and sell stocks with confidence, you can join Tykr for free. And if you want to go a step further, I do have a free training down below titled The 3-Step Investing Plan to Buy Stocks with Confidence. Thanks for checking out this video. We'll see you in the next one. Bye for now.